What's up, mortgage coach community? I'm sitting down with Jermey Forcier, who needs no introduction, at least in this community. I've been hearing a quote starting to come up more and more. I heard it for the first time a week or two ago. Now the quote, marry the house, what is it?
It's marry the house, date your mortgage, divorce your rent.
Well, divorce your rent's the new piece.
Yeah.
I've been hearing the marry the house,
Yeah,
date the mortgage for like a couple months.
totally.
But the nuance of divorce your rent, that's a new one. So first of all, this is super on point in this market. There's still a lot of first-time home buyers that now, they're in a better shot of getting a house. It was pretty tough for those guys several months ago. And so while rates have gone up and affordability is a challenge, the fact that they're not in the kind of bidding wars that they were before. And I don't know, Jermey, are there less cash offers now, or is cash still king?
There is a considerable amount of less cash offers, at least in my market. I mean, I'm not seeing them. They're few and far between right now. I mean, you think about it, the stock market has gotten hammered. People have less cash and capital to work with unless it's like a giant institutional investor. So I've seen the cash buyers taper off dramatically, even in the loans that we're doing. If there are competitive offers, meaning maybe there's 2 or 3 instead of 10, they all have financing. So I'm definitely seeing that cool off quite a bit.
So it definitely bodes well for the first-time home buyer. They've got a better chance of getting a house now. So I'm all about helping you guys get loans now and do it in a way that gives you a competitive advantage. So Jermey, first of all, why don't you just provide some leadership on how you're delivering advice and value based off of that quote, and how you're winning with mortgage coach in today's market.
Yeah, so the investment, so Mary, I heard it from a guy named JJ Mazzo, and who knows where it originally got created, but I saw him do a post literally that said, marry the house, date the mortgage. And I was like, I'm stealing that. I'm using that moving forward. It's incredible. So I've been having this conversation for a couple months now already. And I think it's extremely, extremely important because people are, I don't want to say fearful, but they're uncertain, right? And when there's uncertainty, it takes us as the experts, like in real estate, loans, et cetera, to provide like a sense of security when there's a lot of uncertainty. What I see most people doing is freaking out and going, I know rates are crazy high. They're the highest they've been in 15 years. And they just heighten the uncertainty of anyone that's looking to make a decision. So I've really taken this whole marry the house, like think about the reasons why you marry someone. Right? Like what would be the reasons why you want to be with them for a long period of time. You love everything about them. You accept the blemishes. Like there's so many easy ways to use, analogy metaphor of like being married and committed to something, and then also dating, being able to not be like super committed to the mortgage side of things. Just like in relationships, when you're dating, you find someone better, whether they're hotter, nicer, smarter, more fun, whatever it is, and you go and you date someone else. Well, same when an interest rate is lower or a different program comes out that's going to benefit you. And this is how I'm explaining it to customers. And they are primarily first-time home buyers, Dave, to your point. I mean, the first-time home buyer market is going to be the driving force, I think, moving forward for the next year at least, because people refinanced at 2.5, 2.8%. They got a 15-year at 1.9. We're not going to see people move the same way, in my opinion, as we have over the last decade, 2 decades. So the first-time home buyers really is my focus because I think that's where the market is going to be. So showing people the idea of, the marry the house, get the house that you want. You have a lot less competition right now. Interest rates are what they are, but also combining that with showing them, hey, if you offered a little bit more and got a credit through a seller, buy down, et cetera. And then also showing them in the future, because you date the mortgage, here's what we're estimating it's going to look like when rates go from 6 1/8 to 4 1/2. Showing them all of that in one presentation, I think is extremely powerful. And I have a couple examples if you want me to run through them, Dave.
Let's pull them up. And I just want to pile on though, when you look at the demographic data, guys, first-time home buyers are a massive opportunity. And I would push everybody in the mortgage coach community, be a first-time home buyer specialist. Like I specialize in helping first-time home buyers. Now, you can also specialize in helping families optimize their equity. and optimize how they build wealth with real estate. And so they may not be, selling their home, buy a new home, but you know what? We could optimize their equity and help them get a move up home, or help them get a second home, or help them get an investment home. So I think being, the two top niches for sure for the next 24 months are first-time home buyers and optimizing equity to build wealth with real estate. Two conversations that I would just push every mortgage coach. If you can't do that at a mastery level, then you're not optimizing your success.
Totally. So I'm going to share my screen, and I'm going to walk you through two links, so two presentations that were created in Mortgage Coach. One's a rent versus own, and the other is the kind of marry the house, date the mortgage type thing with a seller buy down. So you can see how I'm presenting. So this is for the same customer, okay, same borrower looking to make an offer, and this is how I'm presenting the information. So if you can see my screen right here now, Dave, this individual wants to make an offer. Place is listed at 875. Now, keep in mind, I know the market is soft, etc. This is literally priced way too, it's priced low on purpose, okay, for this particular home. So context is always important, right? Especially when you're giving strategies to people, is that you need to know like what individually it looks like. So in this example, I showed the client that, hey, if you were to offer 900,000 with no credit from the seller, and this is after we've already had a conversation about it. So you want to, step one, introduce the information over the phone or in person or on Zoom, introduce the information, and then you want to go back and create the presentation so that they have context. Okay, it's really important actually. So here they would get a 30-year fixed rate mortgage at 6.125%. The payment would be $54.3897, and their total cash out of pocket's about $193. Well, in the second column, I showed, because this individual is a little payment sensitive. They're like, hey, we're at our max approval. Like we really want to stay, under, $5,200. Well, I showed them that, listen, if you went and just offered 927 instead of 900,000 and ask for a 3% credit, it's going to be the same amount of money to the seller. And your interest rate, though, would be 1 full percent lower. And your payment is going to be $51.3021. And your cash out of pocket is identical. So this is a really easy way to introduce this to an individual. Now, in the third column, this is where I'm talking about dating your mortgage, okay? So I'm explaining to him that regardless of what you have to do to marry the house, to get the house that you want, you still get to date your mortgage. So whether the seller wants to accept column one offer, and that's what your payment is going to be temporarily, or whether they accept number two strategy in the second column, and you're still going to only make this payment for a short period of time. When rates go down, we're going to refinance and date a new mortgage. So I show that if rates go down 4.5% target, payment would be about $48.49 and 87 cents, which is significantly less. It's under 5,000, not just 5,200. So this is how I'm presenting the information first on strategy, on how do we go in, what's going to be most attractive to the seller, because we still need to remember that we need to be attractive to sellers. We have to be attractive to sellers. That's how you get contracts accepted. And then I showed what the borrower's looking for, is that how do I get my payment lower? Here's a strategy how to get your payment lower. And then in the third column is really like, this is what you're targeting though, once you get in the house and you can redo your mortgage in the future. Having it all in one presentation, I think, is critical, because it allows them to connect the dots. It allows them to follow the process, see how the conveyor belt's going to work, and they can see, feel, hear, because there's a video on all of these explaining it to them. And then that way they can ask great questions. But bottom line, Dave, it doesn't matter if you pick option one or option two, because option three is what it's going to end up being in the future anyway.
I love this. And Jermey, I mean, this is a great strategy. I love the language you're using. I know we're going to be doing a masterclass next Wednesday. I'm actually looking up what time it is next Wednesday. I think it is,
I believe it's at 10:30 or 11 a.m. Pacific, something like that.
It looks like 11 a.m. Pacific. Yeah. So we're going to have a full hour. Jermey is going to have a couple students of his, people that he's coached, and it's really going to be a master class. And what is that going to be on? Because you had some ideas on what you wanted to cover in that.
It's really going to be mostly around highlighting them, how they're newer in the business, both of them, and they're both killing it. And they're killing it using Mortgage Coach. And some of the things that I teach them, which I'm going to share with everyone, is how to use pattern interruption. Okay, and pattern interruption is how we use words or ideas to disrupt what someone's normal thought process is. So then you're the expert and you're in control. And I'm going to go through how I'm teaching them how to do that and how I do it as well. I already did it here twice, by the way, while we're on this call, on how you get them to focus on what you want them to focus on and think differently so that you then are in control of the conversation. So that's what we're going to highlight and go through. And Mortgage Coach is just so easy to use in that way to your benefit that everyone's going to walk away with a few things that they're going to go, that's going to get me a new loan tomorrow. And that's my hope for the masterclass.
Yeah, so make sure you guys check that up, sign up down below. I'll put a link if you're watching this in YouTube so that you can sign up and go through that masterclass. So Jeremy, let's see how now same client.
So same client.
You use this first with the client so they can just get the concept of, when you were addressing affordability, like first time home buyer, you were giving them some affordability options, and you were letting them know and teaching them the concept that you marry your home, you write your mortgage, see how this works. Okay.
Yes.
So then I assume they committed to you, or did you need to do this to get commitment? This next one?
I sent this, so I send these together. So in the email, it would have, here's the link 1 around the strategies that we talked about, et cetera. And then it would be link 2, which I titled Divorce Your Rent, okay, which is a rent to own. So they get them in order, which is important to me. Okay, the order is important. Click first on the strategy, video walking them through everything, understanding that it's going to go down in the future regardless, feeling more comfortable about making the offer, getting comfortable with the monthly payments. And I want to make sure I'm crystal clear here, Dave, with anyone who's watching this. This isn't me talking someone into something they can't afford. Like, I believe good people deserve great advice. It's been my tagline forever. This person is very qualified for it, but their comfort level is still, uncomfortable with the payment, regardless of what the debt to income ratio is. And that's really important to hone in on. I just want to make sure everyone understands that. Now, the second link, this is a rent versus own. And what's so great is because we're hooked up, Dave, at our company with the enterprise integration. Like, this brings all the stuff over directly from our LOS, like the rent, it brings in their rent. I'm literally clicking like a couple buttons and it's creating this presentation. So I'm super pumped on that. Thank you for setting that up for us. So this shows,
for helping me get that set up.
well, of course, man, it's awesome. So in this one, my video, because once again, there's a video, I'm explaining them, like, here is another concept I want you to look at. Okay, so I want you to look at how this compares to your current rent, right? And how this is going to help you build wealth over time. So I show here, their current rent is whatever it was, it pulled over, it's 34 something, and then their renter's insurance is $40 a month. Okay, so current rent is $35.14. Now I showed them that, and what I'm trying to highlight here is that the slightly higher offer price with a credit is the best. Okay, that's my influential point in all of this. Okay, so they've already seen it once, now they're seeing it compared to their rent. So in this scenario, I'm showing, here's if you do the no credit option, just like I showed in the previous link. Your payment's $54.38, but you have a tax benefit of $877 a month per their tax bracket, as well as you're paying down principal of almost $700 a month, which is real equity. That is yours. That is paying down that debt and having more equity, more value in your house. So your actual net monthly payment, even though you still have to pay the gross amount, of course, is about $38.61 compared to your current rent of $35.14. So for about $300 more a month, you can own, a $900,000 house. I said, but look at, this is so interesting. If you were to offer a little bit more and get the 3% credit, you get the lower rate. So the payment's $51.30, tax benefit at $1,200 a month, principal being paid down at $870 because the interest rate is lower. So your net payment is actually $500 less a month, taking into consideration the principal you're paying down as well as your tax deduction. This is why it's a home run to not just focus on price of the house, but cost of the loan. because I'm showing you here that you can build wealth and have a payment after these, deductions, as well as your savings account. I call it a home equity savings account. You're looking at actually a payment that's less than your current one. So if we execute this strategy, I would offer 927 is my personal opinion. Ask for the 3% credit. And don't forget that regardless, you're still going to have a lower interest rate in the future anyway. This is how you divorce your rent. You have to show people that they're building wealth. By the way, I don't even have to go into the fact that rents are going up, on average, 10% per year. Let's call it 3% is what I put in here. Annual increase. You don't even have to go into any of that because this is so powerful in itself.
So Jeremy, tell me what you think here. And guys, there's links to these down below. So if you're watching this in YouTube, down in show notes down below, there's links. But I believe really in every market that loan officers should be giving every family a rent versus own. Just giving a family a fee worksheet is not education in value. Giving people a mortgage coach, rent versus own, it's financial literacy. And let's face it, when affordability is a big issue, how are you going to solve that problem for a consumer? You know how you solve that problem? You empower and educate them so that they know the full short-term and long-term value of homeownership. And most people just kind of have a back of the napkin concept of what it is. But when you put a total cost analysis together, they know what it is based off of their beliefs, based off of rates, based off of local market. I think it should just become a requirement for every single first-time home buyer, whether they want it or not. Just give it to them. What are your thoughts on that?
100%. And I will say that I am guilty, right, of the last couple of years being so busy that I didn't even take the time sometimes to do this stuff with every single person. I was always giving, of course, good advice and strategies, but right now, with the little bit of buffer that we have in time and things being a little bit more calm, it's really allowing me to go back in and hone my skills and brush up on stuff I was rusty on and realize that you're super valuable. You are so valuable to a transaction, to a positive outcome, and to give really good advice to change someone's life. I mean, when I'm just looking at even the rent versus own as I go down in the graphs right here, Dave, it's crazy when you look at rent versus principal paid over 15 years. Literally, it's rent at $782,000 over 15 years versus principal paid down of $235,000. That is a $552,000 net worth swing just from owning a home and having a payment that is net actually less than what you're paying in rent after your deductions and your principal benefits. So you have to teach people this stuff, because if you don't, they don't know. It's just a fact. People don't know what they don't know. So if you dive into this, you're going to have way better conversations. You're going to have way higher conversion, because conversion right now is critical. If you have leads right now, because leads are down, we all know it. Number of opportunities are down. So we can't afford to miss the at-bats. When we have an at-bat, we got to hit the ball. And we got to hit the ball. We have to be ready. We have to be prepared to make a difference in this person. So they're going to look at you in a different light. And whenever they do buy a house, whether that's in 3 days, 3 months, or 3 years, you're going to be the one that they're going to call.
Yeah, and hitting the ball does not mean just pre-qualifying someone.
No.
We believe that hitting the ball is helping the family understand the long-term benefits of homeownership and understanding how they can achieve financial freedom at some point, whether it's a first-time buyer or a move-up buyer. The best loan officers aren't just, here's your rate, here's your payment, here's your cash to close, transaction, let's go. The best are financial freedom. Let me show you what homeownership can do for you. So Jeremy, last thing before we wrap this, how quick can you create one of these total cost analysis presentations? Is this taking you how much time? And then also, now that you have an integrated solution, how much time is it saving you by being an enterprise client?
It's crazy, but let's start in reverse order. It's saving me an unbelievable amount of time. I was already really fast. Okay, that's the truth, right? I was already really fast at creating them, but I would still probably spend 5 or 10 minutes writing down the notes of what I was going to put in, and I was able to create them in 2 minutes. But really, it's 12 minutes, right? When you look at all the stuff I was having to do to look in the LOS, et cetera. So now clicking a couple buttons is saving me 10 minutes of prep time or 6 minutes of prep time. If you multiply that times 10 times a day, it's an hour a day. Like, so it's saving me a ton of time on the enterprise side of things, which is great. It also makes things a lot more accurate. And Dave, I hope you're proud of me. For the first time, I'm training my team to help me with them, because now they can press buttons and it's in there, rather than me explaining my crazy art and science, like the way that I do it and how now they're just like, boom, 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 boom. There you go. So I've set up the fee templates. I've done all the stuff in the last month and a half. And it does really make a big difference. And I appreciate you bothering me about it for years, because you were right. I was wrong, and I'm really honored to have it. So I'm sending out, yeah, I'm spending, I would say, 20% of my day putting together presentations for clients, like something like that.
Part of what you love to do is you're the advice guy. You know, like to give the advice to the consumers, and then all of your teammates are just helping you do transactions. So you're either meeting with realtors to create leads, or you're bringing advice, the things you're a genius at. So guys, if you want to deliver advice at scale, you know, if you don't already have an enterprise version of Mortgage Coach, let your management team that you need it. We integrate with, you know, LOSs, pricing engines, CRMs, you name it. Mortgage Coach can integrate. Just let your manager know that you need that. Jeremy, any closing thoughts before we wrap this call?
No, I would say number one is get comfortable with showing people multiple strategies in one presentation. Like, that would really be a takeaway. I think sometimes we get too linear of like, I'm just going to show them these two options, a point, a no point. Don't be afraid to show multiple strategies. Keeping it simple is critical, though. Simple strategies in one presentation. It's had a really, really positive effect on my conversion over the last few months as the market has changed. People have different needs, different fears or anxieties. Use multiple presentation styles within what you're presenting. So don't be afraid to show a regular loan with no credit, a seller buy down, a 2-1 buy down, all in one, right? And a recast for the future of like what it's going to look like in the future. Don't be afraid to do that. It's going to really increase your conversion and the quality of your conversations, which will equal more quality on the backside of your pipeline.
So a couple closing thoughts for me, guys. So, you know, here at Mortgage Coach and Sales Boomerang, we are absolutely dedicated, and we believe that all borrowers can achieve financial freedom. I don't care how much money they make. If they pick the right loan and they always manage the right loan over time, they can achieve financial freedom. And like, we're committed to empowering lenders to become lifelong champions to borrowers. And so Jeremy is just a great example of that. He's helping someone understand how to marry the home and rent the mortgage. He's showing them how to divorce the rent. And then he's helping them manage that over time. And Jeremy, I assume this is still one of your regular moves, like for one of those, let's just say move up buyer, where you're showing different rate options, you know, and then you're showing the future cast. Is this still a pretty common type of TCA?
Yeah.
Maybe not for a first-time home buyer, but it's a way that you're showing rates with different point options. Still,
still 100%. I mean, here's another reality is that so I got a call this morning from a guy who wants to make an offer, right? And he was like, hey, I got quoted 4.9%, right, on a 30-year fix with no points. First of all, no way with this particular scenario. It's just not possible, okay? But I said, hey, not a problem. Don't get offended, number one. People are scared. When people are scared, they're going to try to find things that maybe aren't real, okay? It's the easiest way to take advantage of someone, which I never would, but people will, right? If they can take advantage, they're going to take advantage to get a sale right now. So I pulled up this, Forbes article that just came out today that literally says right in here that interest rates are 6.41% on a 30-year fixed rate mortgage right now. And it goes on to show you, and there's all these ads like in it, literally, of like, I'm not going to say the company, but a bunch of different companies, internet companies within the article. So the article says 6.41. Guess what all these rates say, Dave?
What?
4.93, I'm reading them right now, 5.02, 4.99, 5.48, and in tiny little font underneath it, it's like 2.9 points, and then additional fees of $7,300. I mean, yeah, you're paying 4 points, right? Like to get that actual loan. And I'm not knocking it because it's a great marketing strategy, quite frankly. All these companies, someone gets, but I think it's ironic that this is inside of the online article. And so pointing people to stuff like that and pointing it out and then showing them, here's how you can get to the 5.1 that you saw in here. Here's how you can do it. You get a 3% credit. You take that and apply it. So use all this stuff that's confusing in the market to your advantage and show them how they can actually do it.
Hey, you know what? I know we got to wrap this up, but I just can't help myself because I read this article over the weekend, and I'm going to be doing more calls on this. But it was in the Wall Street Journal, this weekend on Saturday. Actually, Rich Harris, our CEO, shared it with us in Slack. And it was what great leadership looks like now versus pre-COVID. So 2020, pre-COVID, the top traits of leadership were tolerance to ambiguity, adaptability, risk-taking, openness to differences, and trust. Now, guys, this is the Drucker Institute, Peter Drucker, and they study this stuff. So this is data. For the first time in history, curiosity is now one of the 5 most important traits to leadership. And I think that's a push to every loan officer in America. Guys, you all think you know what the customer wants. You're not curious. You need to put a total cost analysis together for a family and be curious. Let the numbers just speak for themselves. And then check this out, guys. In terms of traits, for the very first time in history, trust instills trust. You look on the far left, instills trust. It's not coincidental. For the first time in history last year, according to the Edelman report, which is the #1 report that measures trust in America by consumers, for the first time in the history of America, this trust beats trust. Like to say people are skeptical is an understatement. Like for the first time in America, more people are distrusting than trustworthy. So here's my takeaway for a mortgage professional. You need to make curiosity and how you instill trust in people a priority. And I only bring that up. I didn't plan to bring it up in this call, but I'm watching you, Jeremy. And it's like you epitomize curiosity for the consumer at scale with every consumer. And then the process that you put people through installs trust. You show them the numbers, you show them the assumptions, and in a distrusting society, you are creating a difference. So it's just part of like how I see this work and why this is so important.
The easiest, Dave, and I know we'll wrap here, but I want everyone to hear this, is that the easiest way to instill curiosity is that you have to be curious yourself. Okay, you have to. Like, I am a very curious person. Right? I get in debates all the time with friends, stuff like that, where they're like, you're being an idiot, like charcuterie yesterday. One of my friends literally was like, oh, this is vegan charcuterie. Like, charcuterie is just meat. And all I said was, is it though? Like, what's the definition of charcuterie? He's like, you're an idiot. Are you serious? And I go, no, like literally, have you ever looked it up? I haven't. Like, I'm just curious. Right. And I did. I looked it up and I was like, oh, well, obviously, yeah, it's cold meats, but really the definition, right, is from France, was really like pork butcher shop. So I know that that's a silly example, but be curious and you'll find out things that you just had no idea. You didn't know the rent versus own. I'm curious as to how it looks like with the principal paid down in their tax deduction. So I just put in the numbers. I'm curious. I'm like, oh, those numbers look good. Present it. Like, you have to be curious first, though, before you can instill curiosity in someone else.
Boom. Little bonus lesson from everyone. Jermey Forcier, next Wednesday, brother. Let's rock.
Thanks, buddy.
Links down below. Check it out. If you got value, give us a like. Make sure you subscribe to the Mortgage Coach channel. And this is a wrap.
Thanks, Dave.
Take care, y'all.